Hi everyone, so excited to be here in Rio, one of my favorite cities, with Stellar, one of my favorite blockchains for Meridian, talking about one of the hottest topics recently in blockchain, tokenization, RWAs. I'm Camila Russo, founder of The Defiant. I'll let the rest of our amazing panelists introduce themselves, and then we'll get to it.
Hey, good afternoon. I'm Ed Nwokedi. I'm founder and CEO of Red Swan CRE. We're a full-service tokenization platform of commercial real estate. We've tokenized about $5.5 billion of real estate so far and have a pretty good pipeline. Really excited about the space and looking forward to talking to you all.
Hey everyone, thanks for coming. Graham, CEO, co-founder of RChats. I've been going 7.5 years and I've been tokenizing pretty much every security out there.
Hi everyone, my name is Vinh Tran. I'm an Associate Director of Business Development for WisdomTree Digital Assets. We're one of the world's largest ETF sponsors. We have over 130 billion in AUM. We're making a push towards tokenization with now 14 funds across Stellar and 5 other blockchains. Excited to be here.
Yeah, and I'm Patrick Campos. I'm the president of Chimera. Also work with a number of DeFi companies. I'm the chief business officer of Fuma Finance. One of my colleagues, Kazim from Morph, was just up here on stage. I previously was the chief strategy officer at Securency, which is an OG Stellar company that is now actually the technology behind DTCC Digital and also the technology behind WisdomTree Prime.
All right, so the real-world asset space has grown tremendously. It's now $30 billion in total assets on chain. Half of that is in private credit. $7 billion about is in U.S. Treasuries, and the rest is distributed among a handful of other use cases. So 30 billion is still a drop in the bucket in crypto and even smaller compared to traditional finance. We only have had 2 use cases really taking off. So for the entire panel, starting with Edward, how big do you think this sector will grow in the short term, say in the next 12 months? And what new assets or use cases do you see taking off and driving that growth?
Driving the growth. Well, thanks for the question. Well, the real estate, according to BCG, we see about something between 13 and 19 trillion dollars is expected to be tokenized over the next 7 years. In real estate, we're seeing roughly a $75 trillion market. Real estate's the largest asset class, which is what we're very interested in. I have 20 years experience in real estate with Cushman & Wakefield, so I see the demand, especially now with higher interest rates. The flywheel for commercial real estate transactions has slowed down. People can't exit, they need liquidity. And by tokenizing their properties, they're able to get a lot of liquidity out of their property and continue to hold that property. So that's why we exist. I think there's continuous demand, and we're looking forward to servicing a lot of clients, both here in Brazil, but also United States. And we're also in GCC, and we're in Africa, West Africa. Thank you.
Yeah, I think the numbers are underestimated already. I think things like RWA.xyz, which people use as a source, doesn't have every chain on there or every project that's being worked on. I think it's already larger. And everyone kind of was asking whether RWA is a thing. We strongly always believed every asset's moving on chain. And we're speaking to so many top financial institutions now that has really gone from whether this will happen to all believing it will happen. They're all putting a large amount of money into huge projects, collateral transfers, securities lending. These things have trillions of assets. I think every asset in the world's worth over a quadrillion. Every one of those is moving on chain. We're convinced about that. As by the end of next year, I think it's at least 10x growth from now. The regulations are in line. The big financial institutions are here. A lot of the initial building's been done. So now it's about creating the utility for these RWA.
Yeah, absolutely. I think institutions are here, and it's hard to project numbers, but I know from experience and what we've seen at WisdomTree over the past year alone, we've grown from 12 million in AUM to now close over 900 million AUM across all of our tokenized funds. We have one of the largest tokenized money market funds on the market now, and I think to your point, that's only going to get grow and only going to expand as more on-chain capital comes on-chain and more issuers issue RWAs on-chain.
Yeah, so look, I mean, obviously, as everyone said, there's no doubt that there's going to be a huge sort of growth, and yeah, to Graham's point, there's a lot that's already tokenized, but there's more coming. I mean, you see projects like Robinhood, obviously Ondo's launching an equities tokenization platform, NASDAQ filing to be able to trade tokenized equities on its exchange. I mean, all of that is happening, but I think the more important question is, what impact is tokenization going to have really on distribution, on velocity, and, as Graham said, on utility? I think that's the most important thing. You can tokenize anything. And there's a lot of stuff that's been tokenized. It's just gathering dust on shelves and, siloed ATSs and MTFs and things like that. But it's really, in my view, it's bridging all of the creative energy from the DeFi community to these RWAs in a way that doesn't trap them in old school institutional silos. Then it matters how much is tokenized, because then you're creating real utility and real velocity for these assets. But I think it's coming. Obviously changes in Washington are impacting this, but also, we were just talking earlier, even sort of the more TradFi, like WisdomTree doing stuff with Aave, you're seeing that confluence, and I think that's the more important development than the actual volume of tokenization.
Yeah, well, I was also asking what assets you think will be or use cases you think will be driving that growth, because like right now, like I said, the demand for RWAs has been limited. It's been some on the money markets, US treasury bonds and so on, but that's it. And we're seeing all these new companies come with tokenized stocks, and I think we're gonna see a proliferation of that offering. But I don't know, I'm skeptical whether the demand is there, because we've seen those tokens come to market before, but I think the crypto audience isn't very keen on that type of return. I think they're a lot more they're looking for more yield than kind of what stocks can deliver. So yeah, I'm wondering kind of where you think we are, like what can actually take off in the place we're in the market, where it's not mainstream yet. Like, you do need to cater to both institutions, but also those who are already in crypto.
If I can just chime in really quick to what Patrick said, right? Utility is key, right? Why are we tokenizing things just for the sake of being on chain? No, it's because the reason is we can add use cases to that. So we launched or announced that we are working together with Aave to get our assets as collaterable assets on Aave. And I think that opens the floodgate in terms of things you can do on chain. Right now we have the money market fund, but we also just launched the private credit and alternative income fund, which, to your point, is a higher yield product that I think a lot of DeFi and a lot of crypto native community is very interested in seeing more of. And yeah.
I think that you're right about the yield. When you look at some of the stable products, when you look at treasuries or private credit, or actually private credit has a better yield, but stable coins, and when you have yield based on mutual funds, it's a little lower, 4.5 and lower. But I think when you start looking at other asset classes like the alternatives or real estate, you have much higher yields, much stronger yields. But the use case, in my opinion, is very strong. I mean, the person who's tokenizing their real estate gets the chance to pull equity out of their asset. And there's probably, like I said, $75 trillion of real estate around the world. There's like 26 trillion of that locked in the real estate. The only way they're going to get their money out is selling the asset. But like I said, I've been in the business 20 years selling real estate. You don't buy a beautiful asset on the beach of Copacabana and then just sell it off so you can, because your shareholders are demanding liquidity. So I think by tokenizing, it allows them to keep the asset, replace their shareholders, with new shareholders and have a longer term hold on the real estate. That's just one side. On the other side, you have, a lot of people can't afford to buy into a hotel like what we're sitting in right now because it's just way too expensive. But if you can break that price down so that a person is spending $1,000 or $5,000 to have a same equal pro rata share of that real estate, they can now start to invest in real estate throughout Brazil, throughout the United States, and start to create their own portfolio, or even buy a mutual fund, or I'm sorry, a portfolio of like an ETF of real estate that's already been tokenized and have a blended portfolio of return. So I think there's a lot of benefits to it.
No, absolutely. I think tokenization unlocks liquidity. It provides greater access to these assets in ways that we just didn't have before. But what are some of the...
Camila, if I could, because you asked a question, you made a really good point, and I just wanted to follow up on what was said here. So, the question that you asked is, well, which asset classes? And I'll give a very pithy answer to that, just in the interest of time. It could be anything, as long as it's structured in a way that creates the utility that we're talking about. More importantly, your second point, with which I agree completely. I mean, this is what we're doing with Huma and with other projects like Splice and things. Effectively, my thesis, and I've talked about this with some of the folks here, is, and what we've observed in the market is that the RWA is important from a principal protection perspective, right? And that the utility creates those additional enhanced yield benefits, right? So you're right that no one, the DeFi space is not looking at 6%, 7% and going, wow, it's knocking my socks off. That's not the point. It's what they can do with it afterward, whether they're using it as collateral, they're looping, or whatever they're doing, right? So it's actually the characteristics of so whatever the underlying asset is, it's the characteristics of the asset that's going into the market, and some baseline things, yes, yield, but permissionless, fungible, pluggable into DeFi Legos, all of those sorts of things. That's what's really going to be driving that utility.
So the fact that, you need to be able to use tokens like BlackRock's BUIDL, Franklin Templeton's Benki, across DeFi for them to become useful. They can't be just logged off to, KYC, accredited investors and just, not be able to plug them into Aave.
I think the utility is the key point here. So institutions need money market funds. Individuals can hold them too. People in crypto, when they want to go risk off, previously all they could do is hold stables. Arguably, I'd say that wasn't even risk off. If you go risk off now and you can hold Wisdom Tree or Benji or whatever it may be, then you're suddenly earning a yield on your money. So you're earning a decent return if rates are high. And to Patrick's point there's obviously this concept of looping. If you want to, you can use something like Aave Horizon to borrow against it and reinvest into it to generate extra yield. And taking one of these blue chip names and being able to generate higher single digit returns is pretty interesting for a project that's going risk off. And I think it's back to the demand point from the start. The only reason we're not seeing demand is because of the utility. Wisdom Tree is still selling, so are Benji, and that's without a lot of the utility. But now you've got things like Aave Horizon coming, you've got DEXs, you've got people working on 24/7 liquidity, where on a Saturday afternoon, a hedge fund can be risk off into a money market fund and immediately go and buy Bitcoin. Those sorts of use cases are really going to start pushing the demand for RWA. And just one quick additional one. In terms of the winning ones, stable coins without a doubt have changed the world. Digital cash and digital assets being on the same technology has revolutionized this space. But I also think equities are going to start coming soon. You've got a lot of people out there, let's say they're holding NVIDIA. If it was tokenized and you could borrow against it on something like Aave, you don't have to worry about your cash gain. You can get liquidity. You could just start making your portfolio more efficient.
So what do you guys see are the main challenges that need to be overcome to get to this point where we can unlock all this actual utility that investors can get from RWAs?
I think for us with real estate, the biggest challenge is education. 75% of the owners I talked about real estate that mentioned blockchain, their mind goes to Bitcoin or cryptocurrency. They're not really familiar with the benefits that tokenized assets can bring them. But once they're educated about it, they're excited about it, and really no one tells me no. That's why the demand is just continues to grow. I think the challenge is on the distribution side. We need partners like we're partnering with Stellar because they really believe in RWA, and their users also believe in RWA, and so they want optionality with their coins. I mean, to have a currency that doesn't generate any yield is one thing. To have a currency that generates the same amount of a treasury is something else. That's fluctuates to the low side. But to have a project, real estate is something that I think you grow wealth with. Think about people try to buy a house for the first time because they think that's going to be the equity they build up. But if you took those same dollars and spread it into a portfolio of real estate, whether it be hotels, apartments, or data centers, and it's paying you income for the next 10 years, you'll be able to buy any house or many houses that you want because now you have equity and wealth.
Yeah, go ahead.
And just to add, I think stemming from your point, Ed, I think what's important to look at obviously we're both regulated and we try to uphold the highest standards of risk and compliance. For us, a big challenge, and it's two parts. It's KYC AML, and then part of that then is global distribution. How do we think about getting assets into the hands of users that need it, typically outside the US? And to your point, I think Stellar has done a great job of obviously creating the blueprint, right? And having a stronghold in LATAM markets. And I think that is a market that we are excited to continue exploring and potentially working with players like Archax, other regulated dealers that can help support that global distribution.
Yeah, I'm probably as everyone can guess by now. I'm going to continue to be an iconoclast on this, which is ironic because I was engaged in the business of building sort of institutional grade blockchain infrastructure with Securency, and I went all the way over to the dark side after that. And in a simple proposition, which is what do I think is going to be more effective, or even is going to happen sooner? That new DeFi models are going to find regulatory approval, or that the old TradFis are just going to kind of layer in blockchain on their existing infrastructure. And I take the former bet over the latter, both because I think it's more likely to happen, but also because I think it's preferable, right? So with that as sort of the backdrop, the obstacles are a couple, right? There certainly continues to be a regulatory obstacle, but I take a great deal of comfort in terms of what's going on in Washington, primarily because I think that everybody's been focused on the wrong issue. Everybody was focused for a long time on, is this a security? The real issue is identity. It's always been identity, and so now that's coming out. And so I was just in Wyoming for the SALT conference and talking to Chairman Atkins, and he says, look, I want to make the word security not a scarlet letter. Now, combine that with some of the other statements that are coming out from, Hester Pierce and others, including the chairman, and they're beginning to question, whether we need to have this, totally locked down permission regime around all of this stuff. This is a key. If that can get resolved, this is a key unblocker, if I can put it that way. And then, the other things that we're seeing that could accelerate, I don't know. Let's just take a simple thing, right? We're going to see crypto exchanges trading securities against crypto in the next couple of years. It's going to happen. That's a huge, accelerant as well. And then a lot of it has to do with, product creators. And, Ed and I were having a good conversation yesterday about how we can create structures around his products that then meet the demands of the DeFi market. So you got to get a little bit creative around how you take those asset classes forward. And I think that's beginning to happen. So there are some blockers, but I see, great signs of hope.
Um,
Well, I don't think there's many blockers at all anymore. The regs go in the right direction. Most people have built a lot of the tools. I think, we definitely don't need any more layer ones. Everything's getting a bit more confused. We've got 280 odd stable coins, over 200 layer ones. The amount of bridges that we need is ridiculous. Really, we should just concentrate on building apps and use cases and, working with partners out there. But pretty much every one of the ideas that's been discussed now, we can do it in certain jurisdictions, but I'm sure my panelists and others in the audience can do it. So I think, I honestly don't think there's many blockers now. There's education and time that's needed, but a lot of it's done or on the way to being done.
Absolutely, that's encouraging to hear, and I agree. I think a lot of the major question mark around RWAs was always regulatory risk, and I think that's eased enough that people can just build and move forward. I really like your point, Patrick, about finding ways of making access even more permissionless and open. I think that would really make this a crypto product and not just kind of replicating what we have on TradFi. So I look forward to seeing that too, and hopefully the Defiant can help with actually educating the public more on RWAs and tokenization. Thanks everyone for a great panel, and thanks the audience for coming.
Thank you.